Thank you so much for joining us. My name is Barry Erickson, and I'm Community Engagement Coordinator at Wheaton Public Library. And tonight we are proud to bring you this presentation on home financing. Nora Hickey from the DuPage Credit Union will explain how to take advantage of the current market as you look to buy or sell a home. She'll cover important factors to consider when financing a home, including mortgage and home equity options. And we'll also learn timely strategies for applying for a mortgage and how to take advantage of some special offers. So thank you so much for being here tonight, Nora. I'll turn the screen over to you.
Thank you so much. All right. Well, thanks everyone who was able to join, or if you're going to be watching this later recorded. I'm excited to be here. Home financing is definitely, there's so many things we can cover in home financing because it is somewhat unique to each individual. A mortgage is a mortgage is a mortgage, but how it works for each person is very different. So at the credit union, we definitely try and tailor everything to each individual member. So with that being said, I definitely encourage you, if you have specific questions that you would like answered, please put them in the chat. I'm happy to give you as much information as possible, and the more information I can give you that relates to you specifically, I'm happy to do. But otherwise, generally speaking, what we're going to cover today is taking advantage of this market. It's a very interesting market, to say the least. Buying or selling a home within today's market, important factors that you should consider. Whether you're looking to do a primary mortgage or maybe you just want to tap into your home equity, and we can do that with lots of different options, and kind of then getting into the nitty gritty of actually applying for the mortgage and the next steps. So as I mentioned, this is a very unique market. If you own a home, I'm sure you have noticed that homes are selling like crazy all over the place. You've probably seen homes go up for sale in your market or in your neighborhood, and they might only last a day, maybe two, if that, and then they're sold. You might see open houses with people lined out the door to get in. So it's very competitive. So excuse me. But what we do at the credit union is we are here to help our members to be as competitive as possible in this market. So whether you're looking to buy or sell, we're here to help you. Everyone has probably heard that rates are increasing. The Fed actually raised rates today. So if that's something that you're concerned about, keep in mind the Fed rate doesn't always directly correlate to mortgage rates. So historically, mortgage rates are still very low, even though they are higher than they were 2 years ago. When the pandemic hit, mortgage rates definitely hit all-time lows. But having a 30-year mortgage rate in the fours is still an excellent rate. So we can definitely look at different options to help you lower your monthly payment if you weren't able to refinance, or maybe now that home values are increasing because of the crazy real estate market, now could still be an excellent time to tap into that equity. And then there are several ways to use that equity. Like I said, you can either refinance, take cash out, or we can even look at one of our many home equity products. So I don't know if anyone here is specifically looking to possibly buy or sell in the near future, but again, I can't say this enough. It's such a competitive market. So if you are looking to go out and buy in this market, you definitely need to make sure you're surrounding yourself with knowledgeable experts in the field. DuPage Credit Union, does do a really good job at this. I've been at the credit union, for the last 14 years, and we've helped, members buy and sell, a lot. So one thing that you want to consider is making sure that if you are presenting an offer to a seller, you have to make sure that you are presenting the best, most competitive offer, because you are probably one of, and not exaggerating, like 20 other people probably giving this person an offer, if not more, within a 24-hour period. So you have to make sure that yours stands out. So what's nice with DuPage Credit Union is we have a reputation where that means you're a solid buyer, you have good financing, and that we're going to make sure that everything goes smoothly. And your loan specialist can work with you individually too to determine, how to make your offer the most competitive. It is a seller's market because we do have low inventory. So alternately, if you are trying to sell your house right now, it's probably one of the best times to be selling a house. So not a lot of effort required there. Once you get that sign in the yard, it kind of takes over from there, but you definitely want to make sure that you have good realtor representation, and the credit union does have resources for that as well. So some things to consider if you are looking to get out there and buy a home. There's several mortgage options out there. A lot of people have heard of conventional versus FHA. If you're a first-time home buyer in the market, and maybe you don't have 20% down, a lot of people think that they have to go with an FHA loan, but one of the things we like to stress at the credit union is that's not necessarily the case. So an FHA loan can be very beneficial. It allows for a low down payment. The interest rates are good, and it can maybe get you into a house sooner rather than, if you have a couple credit hiccups, that's something to definitely consider. However, conventional also has low down payment options, and then can be a cheaper option as well. So one thing that's required anytime you put less than 20% down is private mortgage insurance. So with a conventional loan, typically your private mortgage insurance will be much less than in an FHA loan. And then once you build up your 20% equity on a conventional loan, you can have your private mortgage insurance removed. With an FHA loan, you cannot. The only way to get rid of that mortgage insurance is to refinance the entire loan, which, again, gauging where rates are going to continue to go in the years to come, that might not be beneficial or cost effective. So that is something, again, a loan specialist can review with you to see what makes the most sense for your situation. So I don't know if anyone has any questions at this point, but again, feel free to put anything in the chat, and I'm happy to address any questions. So whether you're looking to refinance, purchase, or even just look at a home equity, the first thing every lender always looks at is credit. So that's going to determine, what type of interest rates you qualify for, how much house can you afford, and other factors. So it is always a good idea to make sure that you are keeping tabs on your credit report, what's reporting, make sure there's no inaccuracies, things of that nature. So things that go into your credit score are going to be your payment history. How long have you had debts? How long have you been making those payments? Have those payments been on time? How much debt do you owe people? How much credit do you have available to you? And again, how long have you had those trade lines, things of that nature? And those are all things that are going to build into your credit score. One thing I always like to mention is if you are like many people and you have the credit cards or like Discover card that gives you your credit score every month, or Credit Karma, or any of those services, please keep in mind that those are going to give you different scores than when a lender pulls your credit. So when we pull your credit, we are required to use a very specific scoring model that tends to be much more conservative than some of the more updated scoring models. We've tried to get that to change for years, but so far they haven't. So just keep in mind there can be a difference between scores you see and scores your lender see. So knowing what's on your credit is very important so you can kind of gauge that everything is on track. And again, as I mentioned, that's going to determine what kind of rate you qualify for. How many debts do you carry each month? What are your monthly payments? Take that compared to your income. That's going to tell us how much of a house you can afford or a loan you can afford. Do you have a lot of unsecured debts versus secured debts? Those are all things that every lender will look at and take into consideration. And then once we get past credit, the biggest things we then, of course, look at is, savings and assets. And then, of course, your employment. And then, of course, we're going to go through all the required documentation. Typically, it can sometimes, I know you hear the stories about all the paperwork and documentation needed, and it can seem a little overwhelming. But ultimately, at the end of the day, we really try and streamline everything as much as possible. We definitely at the credit union try and only ask for the documents that we need. And if you ever have questions or need an explanation, your lender should always be able to thoroughly explain exactly what they're asking for, why they're asking for it, and how it's going to apply to your loan. But again, we do try and streamline everything as much as possible. So as I mentioned, the credit union specifically has tons of mortgage options for members. So a lot of things that we look at is we do have low fixed rate options because again, we do try and keep our rates as low as possible. We can offer loan terms anywhere from 7 years all the way out to 30 years, of course. But some members want the shortest term possible because they're looking to pay that mortgage off as fast as possible so they can retire and not have a mortgage payment. Other members aren't as concerned with that and want the lowest possible payment. So we have those options. We never charge any prepayment penalties, so you never have to worry about if you're able to make extra payments or pay off early. There's no penalty for that. And before, as we talked about, if you have less than 20% equity in your property, you can definitely still purchase and do a low down payment. And you are also still eligible to refinance in certain situations, even if you don't have 20% equity in your property. The biggest thing is that just requires private mortgage insurance. And as a credit union, our private mortgage insurance tends to be significantly less than other financial institutions because we are a credit union and we're able to pass those benefits off to our members. And then lastly, if you have a home that is located in Illinois, we are able to fully service those loans for the life of the loan. So you would always be dealing with your credit union locally, questions, concerns about payments, taxes, anything. Just want to, call once a month just to check up, make sure everything looks good. We're here for you. So that's definitely a huge benefit. But keep in mind, we can actually lend outside the state of Illinois. We can lend in 45 states total. There's a couple we can't, but that's okay. So we definitely have options for everyone. So going into that, some people own more than one house. And again, we have options for that. So whether it's your primary residence, if you own the property as an investment property, which I know a few years ago when home prices were very low, some people took advantage of that to invest in real estate. So we can always look at those options, see if you would benefit from a lower rate there. Or even if you have a vacation home or second home that you just use, a few times a year for family fun stuff, we can look at that as well. So something that's really popular right now are our home equity loans. As I mentioned, when the pandemic hit, the mortgage interest rates again were crazy low. So if you were able to take advantage of that, congratulations. However, now you might find that there's certain, maybe you want to do some home improvement projects, so there's some things going on where you need to tap into that equity, but you're not sure if you want to refinance the entire mortgage or maybe just take out a second loan to tap into that equity. So what's nice with the credit union is we will do a home equity for as little as $10,000. That's pretty good. You don't see that too often with other financial institutions. We will take equities out on both your primary and second home. So if it's a second home / vacation home in Illinois, we can do an equity loan on that. And all of our home equities are pre-approved for 60 days. So what's nice with that is if, we're not sure how often the Fed's going to raise rates, but once you apply, you're locked into that rate and approved for at least 60 days. So that's really important as well, especially in this market. So in terms of home equities, we have a ton of options, quite frankly. We have our traditional home equity line of credit. That's going to be, you have the money equity in your home. If you want to have a line of credit available to you, it can sit there. If you need it, you can use it. If you don't, you don't pay anything on it unless you draw on it. So it is a 20-year loan. You can draw on it for the first 10 years. After the first 10 years, if you have a balance, it just goes into repayment. But again, if you aren't carrying a balance on the home equity, no payment is due. If you are carrying a balance, we do have a minimum payment of at least $100 a month. And then we do have an annual fee of $50, but it is waived the first year. And that fee is pretty low compared to industry standards. But in addition to that, if you have your primary mortgage at the credit union, we will offer a home equity line of credit with no annual fee. So that's something to look at, especially if you're already a member, have a mortgage, maybe you just want to tap into your equity. Maybe you have a specific project you want to accomplish, or maybe again, you just want the comfort of knowing that you have that availability to tap into it should you need to at any time. So something to consider. Otherwise, if you have a very specific project or something going on and you're not comfortable with the home equity line of credit, we do have a fixed rate conventional equity. So we offer a 5, 7, or 10-year term for those equities. It is at a fixed rate. You borrow a lump sum, you pay it back over the term of the loan. There's no annual fee for conventional equity. There's no closing costs, things of that nature. So again, it's an easy way. If you have a very specific need, we can help you take care of that. And then Alternately, our flex equity is similar to a conventional equity, but it does allow a little bit more flexibility, especially in terms of payment, because we do take that loan and amortize it over 20 years. So that's going to give you a lower monthly payment. And it does have a low fixed rate for the first 5 years, but then after that, the rate can adjust. So those are pros and cons to that. The interest rate index that this loan is tied to is the CMT Treasury, so it does not change as much as the Fed rate or anything like that. So it is a very um, safe project, so to speak. We have a lot of members that like this one. And then this has gotten a little bit more popular, our future value home equity loan, because again, because of the real estate market, some people are looking to potentially move and then they realize that maybe they should just stay where they're at and maybe do some home improvements. But if you're concerned about your equity with this product, we will lend based on the future value of your home. So for instance, let's say once your project's done, your house is going to be worth 500,000, but right now it's only worth 300,000. We can take that in consideration and lend money based on that. There's a lot of other details to this loan though, but if it's something you're interested in, definitely let me know. Put in the chat, or you can even give us a call at the credit union at any time. The other thing that we have that is attractive for people looking to get into the real estate market again, if you're looking to buy or sell, is we do offer a bridge loan. So that would allow you to tap into your current equity to purchase your new home, move into your new home, and sell the old home after the fact. Again, there's a lot of details to that. So that's definitely something we can always review with our members one-on-one to see if it's going to be beneficial. And again, that can help you be more competitive in this market if you don't want to necessarily sell your current house before buying your new house. So those are kind of our home equities in a nutshell. But again, all of our lending specialists are available to go through any of these products in as much detail as you want. But if you ever have any other questions or concerns, just let us know. But for all of these products, one of the biggest things is we do need to get a mortgage application. Applying for the mortgage actually is super easy. Probably takes all of 5 minutes, maybe a little bit longer. But the biggest thing is we would need to definitely talk to you, or you can even go online and just submit all the information. It's really easy again, and we are available locally 6 days a week. So if you ever have questions or want to inquire, just let us know. Right now, we do have some good special offers. So as I mentioned before, we do have a preferred realtor network that we work with very closely at the credit union. And they are a huge resource for our members who are either looking to buy or sell. What's nice with that is if you do choose to work with one of our preferred realtors as a member of the credit union, they do give you a rebate of their commission after closing. If you're selling a house, that's nice because as a seller, you do pay the realtor commission. So it's a little kickback, so to speak. If you're looking to buy, it's really the closest thing to free money that I've seen in a long time because buyers do not pay realtor commissions. So it is a nice added bonus. Also, the credit union is doing a lender credit of $500 this year for anyone purchasing a house. So if you work with the credit union and you're purchasing in Illinois, we're able to give you a lender credit towards your closing costs. So that's nice. And then the last biggest thing is the free loan estimate comparison. Anytime you apply for a loan, whether it be a refinance or purchase, you are going to get a written loan estimate from your lender. And that is very important because that is going to outline all of the terms, payments, interest rate, costs, everything associated with that loan. And they have to disclose it on a very specific form. So we are definitely happy to compare those loan estimates for you. We have found oftentimes that a lot of lenders charge a lot of points or additional fees for their loans. For instance, I was working with someone just a couple of weeks ago. They were refinancing with an online lender who shall remain nameless, but they were charging them, I want to say, close to $6,000 for their interest rate. So we were able to kind of review that with them and let them know, like, if you want to do that, you absolutely can, but we can do pretty much the same thing and we wouldn't have all of those fees. So just something to look at. But at the same time, if we're reviewing a loan estimate and it is a great loan estimate, great rate, great fees. We'll tell you that too. So something to keep in mind. So things that we encourage you at the credit union to always do is number one, definitely make sure that you're understanding all of your financing options, that you definitely feel like you know exactly what the next steps are, what you're going into, that you feel like you understand everything, the documentation being requested, things of that nature, because that is super important. We definitely encourage you to contact one of the residential lending specialists at DuPage Credit Union. Again, we are happy to answer any questions that you have, regardless of whether you're a current member, maybe you're looking to be a future member, whether you've already applied for a mortgage or not. We can review any scenario, answer any questions you have, and guide you to the next steps. And then as I mentioned before, your credit profile, if you go to annualcreditreport.com, you can get a free credit report. It does not give you credit scores, but it is going to show you everything that's reporting on your credit report to the three main credit bureaus. So that's TransUnion, Equifax, and Experian. And that's important because, again, if you have anything on there that you weren't expecting, the sooner you know about it, the better, because then if you need to get something cleared up, you can. Otherwise, or at least you'll always know exactly kind of what's going on. I believe right now you can even get that information monthly because I believe that is um, since COVID started, they have been giving the credit reports, the free credit reports out every month instead of every year. So it is really nice, something to check out. Just plug in a little information and they'll give you the information almost immediately. So again, here, that kind of brings me to the end of my presentation. If anyone has any questions, I am happy to hang out and answer them. But otherwise, here's my contact information, as well as we always like to give Fannie Mae's information. That's one of the primary, secondary lenders that most lenders follow their rules. So if you ever have any interest in that, and again, the annualcreditreport.com. But yeah, some good information.
All right, well, thank you so much, Nora, and we'll give people just a moment to think about any questions that they might have. I'm wondering if you can let us know if someone is thinking about refinancing, especially maybe before the rates possibly go up, what would be the differential between like the current rate that you're paying versus what the rate is now that would make sense to pursue that option?
Sure. So that is always a really good question. A lot of people ask that, and I will say there's no hard and fast rule on that. It is very person specific, because you might be a person who has a $500,000 mortgage, so moving it even an eighth could be significant, versus someone maybe who is lucky to only have maybe $100,000 mortgage. Then they're going to need to see a little bit more movement in the rates or have a different need for what they're trying to accomplish. But that is something that's one of the first things we look at the credit union is there a benefit? What's the benefit? And we make sure that we're all on the same page with that.
Right. Okay. Thank you.
Yeah.
And just another thing that came to mind is that we were talking about how incredibly competitive this market is, and you mentioned, that already securing the bridge loan, having that in place, would be one way to make yourself more competitive. Other thoughts or ideas, ways that people can make their bids more competitive if there's so many coming in for that seller.
Yes, so we've seen a lot of different things. One thing again is making sure you do have a solid lender. Realtors are very picky with what lenders they want to work with and what lenders they don't, and I understand. The other thing is sometimes being strategic with how you write your offer. Are you able to do maybe a bigger down payment? Can you look at faster close time? Different things. I spend a lot of time right now definitely brainstorming with realtors on what we need to do to get our member the house. And a lot of times it works, which is good. Doesn't work all the time, but we definitely try our hardest.
Okay, great, great. Okay, well, I don't see any other questions in the chat or Q&A for now. So we just want to, again, thank you so much, Nora, for all the time and effort that goes into these presentations and to the DuPage Credit Union as well. So I will be sending out your contact information and a few other links to things in a follow-up email tonight to everyone who's registered. If you're watching the recording of this program and would like access to those links and resources and contact information, just email me at ce@wheatonlibrary.org. That's CE for Community Engagement at wheatonlibrary.org, and I'd be happy to send that information out to you. So with that, we'll say take care, everyone. Stay safe and healthy, and we'll see you again soon. Good night.